If you earned more than $109,000 in 2024, Medicare is quietly charging you extra right now, every single month of 2026. And most people getting hit have no idea why. It's coming straight out of your Social Security check, up to $578 a month for a single person. And nobody sent you a clear warning. I want you to hear that again. Money is leaving your account today because of something you did 2 years ago, not last month, 2 years ago. And the cruelest part? For a lot of you, it's fixable, but only if you know the form to file. I'm June. I've spent more than 20 years helping American retirees protect their benefits and their hard-earned money. And in the next half hour, sitting right here with you, I'm going to explain exactly what this charge is, who it hits, and the 3 simple free steps you can take to fight it, or at least make sure it never blindsides you again. This charge has a name. It's called IRMAA. That's IRMAA. It stands for Income-Related Monthly Adjustment Amount. Don't let the fancy government name scare you. In plain English, it just means if your income was high enough, Medicare adds a surcharge, an extra fee, on top of your normal premiums, and it comes out automatically. Here's my promise to you. By the end of this video, you'll know exactly which income line triggers it, exactly how much it costs at each level, and the exact form, Form SSA-44, that can lower it or even erase it if you qualify. And stay with me all the way to step 3 in the action plan, because that's where I'll show you the one mistake that even careful, rule-following retirees make, the mistake that quietly costs them thousands of dollars they could have gotten back. Even some financial advisors get this part wrong. I don't want it to happen to you. Let me tell you about Robert. Robert is 68 years old. He lives in Ohio. He worked his whole life as an engineer, paid every tax bill on time, never cheated on anything. A good, careful man. In 2024, Robert finally retired, and to celebrate and to simplify his life, he and his wife sold their second home, a little lake property they'd had for years. Smart move. They didn't need it anymore. That sale put a chunk of money in their pocket, a one-time gain. Combined with his last year of salary, Robert's income for 2024 jumped up over $140,000, just for that 1 year. Then in 2025, fully retired, his income dropped right back down to a normal retirement level. Pension and Social Security, modest, comfortable. Robert thought he'd done everything right, and he had. Then January of 2026 arrived. Robert checked his Social Security deposit, and it was smaller, noticeably smaller. He thought it was a mistake. He called around. Eventually, someone told him it's IRMAA. Because his 2024 income crossed a threshold, Medicare was now charging him an extra $240.40 a month, on top of his regular premiums, for the whole year. That's nearly $2,900 over 12 months, almost $3,000 gone, because of a one-time home sale 2 years earlier that he'd completely forgotten was even connected to Medicare. Here's the most painful part. Robert qualified to appeal it. He had retired. His income had dropped. There's a specific form for exactly his situation, but he didn't know it existed, so he never filed it. And the money that left his account during the months he could have appealed, in most cases, that's gone for good. It was completely avoidable. And Robert is not alone. According to CMS, that's the Centers for Medicare and Medicaid Services, the federal agency that runs Medicare, roughly 8% of everyone on Medicare Part B pays this surcharge. That's millions of people. Many of them caught off guard, exactly like Robert, so let's make sure you're not one of them. Let me break down how this actually works, slowly and clearly. Here's what the rule actually says. IRMAA is an extra charge added to 2 of your Medicare premiums when your income is above a certain line. The first is Part B. That's the part of Medicare that covers doctor visits and outpatient care. The second is Part D. That's your prescription drug coverage. If your income is high enough, you pay a surcharge on both. In plain English, that means it's not a bill you sign up for, and it's not optional. It's automatic. Social Security takes it right out of your monthly check or sends you a bill directly if you're not collecting Social Security yet. You don't get a chance to say no. Now here's the piece that trips up almost everyone. This charge is based on your income from 2 years earlier. 2 years. So your 2026 Medicare surcharge is calculated from your 2024 tax return. The income number they look at is something called MAGI. That's Modified Adjusted Gross Income. In plain English, that's basically your adjusted gross income plus any tax-free interest you earned, like from municipal bonds. So when you think about IRMAA, don't look at what you make now. Look back at what you reported on your 2024 taxes. That's the number that matters for this year. What should you do with this fact? Right now, before you forget, go dig out your 2024 tax return and find your adjusted gross income. That single number tells you whether this even applies to you. Here's what CMS actually says about the dollars. For 2026, the standard Part B premium, what most people pay, is $202.90 a month. If your 2024 income was $109,000 or less as a single person or $218,000 or less as a married couple filing jointly, you pay zero surcharge, nothing extra. You're in the clear. But once you cross that line, here's what gets added on: per person per month, combining the Part B and Part D surcharges together. If your 2024 income as a single person was over $109,000 and up to $137,000, you pay about $95.70 extra every month. That's about $1,148 for the year. If it was over $137,000 and up to $171,000, that was Robert, you pay $240.40 extra a month, almost $2,900 a year. Over $171,000 and up to $205,000, it's $385 extra a month. That's $4,600 a year. Over $205,000 and under $500,000, it jumps to $529.60 a month, over $6,300 a year. And at the very top, $500,000 or more, it's $578 extra every month, nearly $7,000 a year for one person. In plain English, the more you made in 2024, the bigger the bite. And remember, for married couples, those income lines are doubled. But here's the catch most people miss. If both spouses are on Medicare, each spouse pays the surcharge separately. So at the higher levels, a couple can be paying close to $14,000 a year in surcharges alone. What should you do with this? Find your income bracket on this list. Know your number, because that's the figure you'll be checking against everything else I'm about to tell you. Now, here is the part that most people, including financial advisors, get completely wrong. IRMAA is a cliff, not a slope, a cliff. Let me explain what that means, because it's stunning. If your 2024 income as a single person was exactly $109,000, you pay nothing extra, zero. But if your income was $109,001, just one single dollar more, you don't pay a few cents more. You fall off the cliff into the entire next bracket, and that $1 costs you about $1,148 for the year. $1 of extra income, over $1,000 in penalty. There's no gentle phase-in, no partial amount, no, you're just barely over, so we'll go easy. You're either under the line or over it, and being over it by a single dollar costs exactly the same as being over it by $20,000 in that bracket. This is why a small careless move at the end of the year, one extra withdrawal from your IRA, one stock sale, one Roth conversion done without checking the threshold, can quietly cost you more than $1,000 2 years down the road. Most people never connect the two events. Now you will. What should you do with this? Before you ever take a big withdrawal or sell something for a gain, check where it lands you against these income lines. Staying even a few $100s under a threshold can save you over $1,000. Here's the trap that catches the most people, and I need you to really absorb this one. The number one mistake is not realizing the charge comes from a one-time event 2 years ago. You sell a house, you do a Roth conversion, you take a big retirement account distribution. All of these can be smart, normal financial moves. But 2 years later, here comes a Medicare surcharge, and the cause is invisible because so much time has passed. The second mistake is just as costly. People see the higher premium, assume it's a permanent government rule they can't fight, and they never even try to appeal. They just accept it. And for many of them, that's leaving real money on the table. So let me tell you about your right to fight back, because you have one. The official rule is that you can appeal your IRMAA using a form called SSA-44. The full name is Medicare Income Related Monthly Adjustment Amount Life-Changing Event. You can get it free at ssa.gov/forms/ssa-44.pdf. I'll put the link below. In plain English, this form lets you tell Social Security, my income 2 years ago does not reflect my situation now because something major changed in my life. And the government actually recognizes a specific list of these life-changing events. They include getting married, divorce or annulment, the death of a spouse, work stoppage, which simply means retirement, a reduction in your work hours, the loss of income-producing property, the loss of pension income, or an employer settlement payment. Listen closely to that list because here's the key one for most of you. Work stoppage. Retirement counts. If your 2024 income was high because you were still working and you've since retired and your income has dropped, you can ask Social Security to use your current lower income instead of that 2-year-old number. That is exactly the form Robert should have filed. What should you do with this? If any life event on that list happened to you, download Form SSA-44. That single piece of paper could erase your surcharge. Now let me give you the plan. 3 steps. Just 3, because 3 is what we remember. Step 1. Check your 2024 income. Pull out your 2024 federal tax return and find your adjusted gross income. Then add any tax-exempt interest. Compare that number to the thresholds I gave you. $109,000 for singles, $218,000 for couples. This tells you immediately whether IRMAA applies to you at all. This takes about 10 minutes and it is completely free. Step 2. If you've had a life-changing event, download Form SSA-44. Go to ssa.gov and search SSA-44 or call Social Security directly at 1-800-772-1213. Tell the representative in these exact words, I want to lower my Medicare income-related monthly adjustment amount due to a life-changing event. Fill out the form, attach your proof, like a more recent tax return or retirement documentation, and fax or mail it to your local Social Security office. This is free. You never have to pay anyone to file this for you. Step 3, and this is the one most people skip. Watch your deadline. If you've already received an IRMAA determination letter and you disagree with it, you generally have just 60 days from the date on that letter to request a formal appeal. 60 days. So do not set that letter aside and forget about it. If you skip this step and let the deadline pass, the money taken out during that year is, in most cases, gone for good, even if you absolutely qualified to get it back. Mark the deadline on your calendar the day the letter arrives. Now here's one piece of genuinely good news to hold on to. IRMAA is not permanent. It's recalculated every single year because 2026 is based on your 2024 income. If your income dropped in 2025, your 2027 surcharge will automatically come down on its own. You don't have to do anything for that part. It falls off by itself once your income normalizes. The fight is really about the years in between and about not overpaying while you wait. Before you go, I want to ask you something, and I truly do read these. Drop a comment below and tell me, did you know about IRMAA before today? Just type yes or no. I want to see how many of you were like Robert, getting charged and not knowing why. I read every comment and I replied to as many as I possibly can. And here's a favor, not for me, but for someone you care about. If you have a spouse, a sibling, a parent, or a friend who's on Medicare, especially anyone who sold a home, retired, or took a big withdrawal in the last couple of years, please share this video with them right now. It could genuinely save them thousands of dollars. That share button is right below this video. One tap might be the most valuable thing you send anyone all year. If you're not subscribed to Retirement Tax Law Pro yet, now is the time. Hit subscribe and turn on notifications. I post new videos every Tuesday and Friday, breaking down exactly these kinds of rules in plain English, because they change every year and you deserve to understand them before they cost you. And in my next video, I'm covering the Social Security earnings test, the rule that can have your benefits withheld if you're still working before your full retirement age. It affects millions of people who have no idea it applies to them, and the surprises there are just as expensive as this one. Click right here to watch it next. Take care of yourself, take care of your money, and I'll see you in the next one.